This episode is intended exclusively to provide information and education to help individuals better understand cycles. However, this information is not be construed as professional advice as to the buying and selling of securities or other investment instruments. In no event does the host express any opinion with respect to or make recommendations regarding the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading securities. Buying and selling decisions are solely within the personal discretion of each individual.
From the mind of Lars von Thienen, the most advanced cycle analysis, hot off the press.
Good day, everyone. Hello from Hamburg, Germany, to wherever you are located. We have Cycles TV. We have another episode for analyzing the stock markets with Cycles. Hello Dale, hello Bruno, hello Andrea. I see you in the chat already. So happy to take your questions at the end of the session. As always, Peter, also nice to see you. Today let's talk today about a little bit continuation of what we did last week. Last week I showed you some major cycles in the Nasdaq and the tech sector, and today I want to pick Apple, the Apple stock. As a proxy, a single stock also may be acting as a proxy for the whole sector and diving into a daily analysis. And then we can set this into context. If you remind last week's episode, you will have it in mind. Otherwise, you can revisit what we did last week here. So today is about dominant time cycles in Apple. But before I jump into that, maybe I need to get back to a question which came up at the end of last session. And it was a question below the video in German, but I think it's a very important question which was raised. And the question was about why we didn't show or discuss seasonal or presidential cycles in the setting I discussed last time. And it's a very valid topic, as here on that channel, we are discussing dynamic time-based cycles. For sure, there are different frameworks on cycle analysis, like seasonality, like static cycle frameworks, like the ideas from Hurst, and other ways to approach cycles. But we don't have the time here and now for 20 minutes, the time we spend together here, to really bring all possible approaches into the mix here. So therefore, this is for education. I don't claim to give you a full broad market analysis for each indicator here. So keep in mind, the main purpose is education, how to apply cycle analysis. The purpose is not to provide you with a full-blown market analysis. I hope that's clear, and therefore, please excuse if I cannot manage every aspect of cycle analysis in this episode here. Right? Okay, but now let's get to work. This was the screen, also the long-term cycles from last week, just 2 minutes to set the context. The longer-term nominal 180-week cycle is starting to roll over. I discussed this cycle in the past episodes, so this is just the context from a longer-term perspective we need to keep in mind. And now let's move over to Apple. But let's start with the current and fresh analysis. So here we have the current stock Apple seen here in our cycle analyzer. For a moment, let's put off the energy model so that we can focus and concentrate on the spectrum as always. So if you're new to cycle analysis, we always start with the spectrum, which is shown at the bottom of that chart here. Here we are looking for the most dominant cycle, which on the one hand is seen here by 167 days. In that case, we're talking here about days. Which is a nice cycle here, which is also selected here by our cycle highlighter with a rank of 1. The another one, which is a shorter cycle of 79 trading days, can be found here at the lower left in the spectrum. And then there might be a longer term daily cycle which is here rolling over at 339 days. So these 3 cycles could be used and can be picked to derive any daily analysis here. And you see they are also marked and highlighted already in the table. So that's the easy one. If you don't have any knowledge how to decode a spectrum, this will be prepared by our toolset for you. So let's start with the most prominent one, so 162 days. Activate this cycle. This cycle seemed to have rolled over already here during summer. It's now rolling over into the December period. And if we review the zigzag pattern of the past, we see that the swings, at least going back into the 2021, 2022, this pattern is a rhythm we can spot in the daily stock prices here. That's just one cycle. Let's make that visible. So what's now interesting here, by the way, if you have not already spotted that, 162 and have a view to 339. So it's not only that this cycle here pops up, these 2 cycles have an harmonic relation to each other. So this is more or less double the length of that cycle, or even it's half of the longer term cycle. So these 2 cycles seem to have an relation towards each other, which is also important in cycle analysis, that we are able to use not only dominant cycles from the pure spectrum, also cycles which seem to have a relation, and even better, an harmonic relation to each other. We could also check our harmonics for that. And here in the lower right, I have now opened another window which shows you the harmonic relations between different cycles. And if I now move or hover over the long-term cycle 339, you see that this has an harmonic relation to 2 cycles, which are highlighted with the purple line in the center or the bottom center of the screen. And one is related to 162 and 119. So 119 is the factor of 3. It's not dominant, but at least you can see why the combination of 162 and 339 not only makes sense from the dominant spectrum perspective, also because of their harmonic relations. So let's bring in the composite model now based on those 2 cycles, which gives you this nice view here. And you can also see that the correlation to the past moves is interesting. So we always have these 2 ups and downs. So now to be seen what happens here, but you see those 2 cycles are more or less able to explain all major changes in trend over the past 3 years. So, and that's why I think that's really interesting. And at least it's just one cycle. It's just the harmonic relation we added to the mix to make a composite of 2. But mainly, this is just one cycle active here, just bringing in the harmonics. So we could now also add a 3rd cycle here, which is the 79. No, it's even the shortest one of all 3. And we could check how the curve will alter, and I will show it in a larger screen here that's always what I recommend, by turning on and off that cycle. Because what is of our interest here is, let's make even the screen a little bit larger here, is we are interested in the forecast, so the near-term future of the price movements or the movements on that cycle composite. And by turning a cycle on and off, you can, from a visual perspective, see how, from a timing perspective, those points will change. So, for example, what we're looking for is here, here, and here. So these are the 3 windows in time we might be monitoring, right? And if we now add the 79 to the mix, you see there is no big deviation. So it would not really matter if you add these 80-day cycle or not. It suggests, it gives you a clearer picture, but I would not use it anyhow because the exactness is just kind of fake exactness here, which is visualized. So I would leave the 79 trading day cycle off and just work with this model as said, because the timing is not really different. And those two cycles I explained before is just one key cycle, which might be interesting here. So with that said, I think that's now the approach how to make your decision on which cycle to pick. And therefore, let me make that clear. I think that's the most important part of cycle analysis. And that's why I always repeat this procedure here on the channel. You need to have a clear view. What is your time frame? Have a look into the spectrum. Select the cycles with the clearest dominant peak in the spectrum from a visual perspective. Use features then in addition like statistical significance, Bartel score strength from the table to derive if this is in place. By the way, our ranking mechanism helps you in doing so. So these are the highlighted lines with the ranking indication. So this is how you can learn why something is picked from our AI copilot and something is used from the spectrum. Then think about possible harmonics between cycles which appear on the spectrum. If you see harmonic relations, try to use those cycles first by building a composite. And then finally, if you maybe are up to the third or fourth cycle you could bring in, just really tweak or see, don't tweak, see and check if the addition of another cycle would really alter the plot going into the future in regards to the points in time when a possible turn could be expected. If you follow these steps and this procedure, this will make sure that with that knowledge, you will always remove cycles which are not important and just focus on cycles which are important on the right side of the chart. That's what you're looking into. Everything else is just curve fitting with past behavior. So that said, this is now the final view we have, yeah, and this would suggest that maybe Apple has reached its key top anyhow in the summer this year. And you see that here it even has not really made big major new highs. So we are in that topping process here and now rolling over into a major downswing into May. We might see that short year-end rally December, early January, but it's not clear if this will happen this year. I mean, that's the seasonality also, which is not just a dynamic time cycle. It's also a seasonal pattern. But that's up to be seen, and we need to follow the technical perspective more closely to get a better clue on that. So what we could now bring in next is some first technical indicators which can help us on the way forward. Let's do it now. So one of the indicators is a possible relative strength index, which we use here, which is a little bit adjusted here and more tweaked and fine-tuned. But what we see here in that case is that we have a nice divergence forming up between price. Yeah, price has been moving higher here, higher highs since summer, while the RSI is downward pointing. So that's the divergence between relative strength, which has not made higher highs on the indicator, versus price, which did make higher highs on the way, while the initial signal took place here, July, August, so before we had the major top here. So this was the, at least from a technical point of view, a perfect signal. Then we saw price turning down, coming up again, making higher highs, but forming a big divergence now to the relative strength. So seeing that, there's still room to go for the indicator to move more downwards. At this current level here from the technical indicator, this is not a buy signal. This is more a continuation to the downside, which should extend into end of this year. And then maybe we closely need to monitor if a quick year-end rally might appear on the horizon or not. That said, again, 20 minutes, 15 minutes, quick analysis. That's the view of Apple. It fits into the perspective what we discussed last week. So now you can move back to last week episodes and check out what we talked about there. And that's the purpose for today. So I use Apple, or used Apple in the past very often, as this is concentrating a lot of volume, a lot of market activity on that single stock for the tech index. So maybe a last comment on that. Normally you need to be careful with analyzing cycles on individual stocks, because if it is just a small stock or small volume traded on that stock, it means it does not attract many investors. The movements of the price will then maybe not be subject to cyclic behavior, and instead maybe just due to individual news or individual market participants, which might drive price due to low volume on that specific stock. So therefore, really be careful when applying cycle analysis on individual instruments. Make sure that there's a lot of volume, a lot of movement, a lot of interest, a lot of market participants are interested in that asset or stock. If that's the case, you can do individual stock analysis on cycle analysis. If that's not the case, I would not recommend to do cycle analysis on individual assets. So that's a precondition you always need to check up front. So short and up to the point, but I'm here to take your questions. So feel free. Let me have a look at the chat section. And hello, Dr. Barton. Nice to have you with us. So maybe also to sum that up, if you saw this, so don't try to get 100% exact fitness of cycles to price charts. Maybe that are some learnings from today, or let's repeat on some key learnings besides the Apple analysis. Let's get back here. So clean that up. And what I mean by that is you could easily select, let's say we have no idea what cycle analysis is and why we just should select 1, 2, or 3 cycles. So if a cycle scanner is able to pull out the cycles which are there, why not just select all cycles we have detected and build a composite, right? So that's just, if you're just from a mathematical point of view, let's use all cycles. Just a click. It's so simple. The computer can do all the math for us. And you see here, right? This will give you an almost perfect alignment between past tops and bottoms on the price chart. Yeah, if you would follow here, that top is more or less exact. Then here the interim low, another top here, another low here, another top here. So that composite looks like, that's the price, and it's completely based on cycles. And that's the case here, what also needs to be said. You can rebuild almost any price movements based on a different combination of cycles. So it's kind of reverse engineering, right? So you can decompose any pattern you might see based on cycles. And this is just what happened here. So it was just taking the price action into account, and it just built a model which can, at least from a timing point of view, not from an amplitude point of view, it can rebuild the exact movements at that time, right? So this is what cycle analysis will do by default. So maybe that's also an interesting learning for you to see cycle analysis is doing. You see here how nicely that fits, and it's just using cycles to rebuild the model. But as said, it will give you a perfect look for the past. Yeah, you see the correlation scores here are close to 1. My God, we have a correlation of 1. And if you would theoretically trade that composite cycle, you would have a perfect profitability score of that composite. You could say, yeah, let's plot that into the future. So Apple will make a key low beginning of December. Don't do that. Don't do that. so please, you know what I'm saying here. So that's just using 1, 2, 3, 4, 5, 6, 7, 8, 9, I don't know, 20 cycles to build that composite. Yeah, pure mathematical approach. So never do that, because this is just curve fitting. This is trying to give you the false exactness, which just is a trap. It's just a trap. So don't do that. You need to have kind of knowledge. Just try to derive the main cyclic movement, because not each and every movement of price is based on cycles. No, it's not. There are trends, there are short-term fluctuations, there are news-driven events, there are some random movements maybe. So you cannot explain every single movement just by cycles. What is the purpose, or what is our hypothesis here, is that the main swings are derived by fundamental cycles. And for that, we need to then detect the most important cycles out of the spectrum, not all the most important cycles. And that's what I'm always trying to use here on the channel. And maybe also the question was asked at last episode. This is the purpose here for the 20 half an hour, to think about how to use cycle analysis, and in specific dynamic time cycle analysis, on financial assets. Yeah, maybe I just quickly go over it for 5 to 10 minutes, but that's the background, not to choose all cycles. And if you don't find a model with 1, 2, or 3 cycles, then maybe there is no key movement which could be explained by cycles. So then skip it. Also might be the case. Maybe we could maybe NH have a quick view on your question. One fundamental is that Apple's results were recently, and the price has underwhelmed since then, even though the results were decent, I think. Thanks for bringing in. For me, for example, what is driving? Are the fundamentals and the earnings driving price, or maybe is the cycle driving stock, and then the earnings are just a result of a leading cycle which has already happened? So I would make the argument from a pure point of cycle analysis, earnings just tell us something about what happened already in the past. So earnings is just a kind of financial mathematical equation, single digit number, which summarize all the activity the past quarter, and what happened on a financial perspective in the past quarter was driven by business decisions a year ago or 6 months ago. So we just, by looking at earnings or results, we just discuss something of the past. Cycles are more or less a leading indicator, which give us a window into the future. So I think earnings will not give us a window into the future, and possible revenues, it's just something the CIO or whatever is plotting to the board to show something for the stakeholders and investors to keep them happy. And then let's see if they can meet according to that. But this kind of financial reporting and news-driven approach to prices is completely different to thinking in cycles. NH, for sure, fundamentals and macro analysis needs to be taken into account. Don't get me wrong here. I think this just cycle analysis is not here to explain earnings, as earnings are more result of the past. Cycles try to give us a perspective into the future, which is not derived to keep stakeholders or investors happy based on revenue estimates or whatever. But it's an interesting discussion, and it's not that I'm right or wrong. I think I just want to open your mind in about that cyclic analysis, time-based analysis is completely independent from news-driven information or macro analysis that is out there. So maybe to end the session, and Dale, I think that's a fair question. Would you please analyze the Apple weekly data? So we just had a view on daily data. So why not? I think we have some time left. So let's jump to the weekly chart. So let me open the weekly. No, let's open a new window for that first. Here we go. Here we have a weekly. So this is the weekly series, right? Yes, correct. So and here we have, oh, that's interesting to see. So that's, okay, let me explain what we're seeing here. So I think here we need to be careful in the sense that we are doing a long-term analysis. We should plot this in a log scale first, okay. And by doing so, we see that looks like we have more or less linear upsloping line here for the Apple price, which makes it quite difficult to detect cycles. That's why we see here this right shoulder is not really what we want to have on the spectrum here. So we could look at these shorter term ones, but the one which pops out first is that cycle here, so 170 weeks. However, it does not really qualify for a good cycle due to the right shoulder, which is more or less a flat plateau here. So we should add more data, more weekly data, going back more into history to validate if this is a cycle we could take into account or not. Just based on this spectrum here, that's not valid. So the only ones are then the shorter ones here, which that's the shortcoming of this analysis, seem to have a clear peak here, but they don't have good statistical scores. So we need to make some decisions here. 60, 50, yeah, let's start with this one here. So 64 weeks, 64 weeks, or 52. So we cannot rule that out, but let's at least give it a start here. Yeah, we have a similar perspective here. So first we have this slightly upward sloping price, while on the technical information here we have the downward move. So let me show you that in a slight larger window. So here we have the technical situation, which gave us the key sell signal at that point in time. So somewhere here, yeah, we had from a technical point of view in alignment with the topping window of that cycle here. So while we had a sideways movement here. Yeah, if you see that period, it was more or less a sideways movement at that topping period here. If you dive in a little bit more deeper, you see that price is slightly rising up, while the technical indicator is not making higher highs. That's the divergence here. And then we had the second signal here while we have touching that upper band, which was exactly here. So we had two tops to the left of that cycle, to the right we are rolling over. So this would confirm a longer term cycle, even moving down into early next year. Yeah, in alignment, by the way, with the longer term analysis I did on the Nasdaq composite. So that's just a very quick and dirty version of the weekly model. To set this into context, you could now start to add the other cycles, but okay, that's again a nice observation. Said it was not clear the 64 or the 42-week cycle here, but you can see that the curve or the turning points from a timing-based analysis, yeah, do not change. So if we select or add the 52-week cycle, it does not really matter. Or if we just use one. So this is the 52-week cycle. This is the 64-week cycle. So it would not really matter. So therefore, we can make our decision. And finally, let's check the 35-week cycle here, which at least from the topping process, it makes no difference. Could bring the low a little bit more early, but that's too early to judge today. So we need more data to confirm that. So at least the topping window doesn't matter if you select all 3 cycles, yeah, or just one. They all agree on telling you that here we have also a long-term top in the Apple stock price. Oh no, this is wrong here. So that's the short-term analysis. I mean, these cycles are valid, which does not qualify here. But if you would select the 169 weeks, it even becomes more evident that this is a key top here. So that's interesting. Even though you could add now all 4 cycles, so this, what you see here is a composite on the weekly model based on 4 cycles, or you could pick just one out of those 4 and it would not matter. All those 4 would indicate you here is the key top on a weekly performance-based analysis. Then it needs to be seen moving forward, but at least they all speak the same message. That's interesting. We have a synchrony of topping cycles out of those 4 at the same point in time on the weekly model. That's interesting to see. And if you, last but not least, bring this into perspective with a possible energy model here at the lower right, without going into the details, you see that for the whole period of, so now a lot of negative energy still active now since this turn here. We have a lot of energy and negative energy until end of the year. And then the whole next year, there is no positive cyclic energy. And even if you remove that, so you will see that maybe, yeah, it depends then on the longer term model. So, okay, maybe I don't want to get you confused. Let's keep out the energy model. It does not give us a clear view. I think what I told you on those 4 cycles, that we have a synchrony of a possible top here in summer into today's situation, which now needs to roll over into end of the year. Dale, I hope that's an answer to your question, and it would now complete our analysis on having daily, weekly, and in between I try to give you again some background information, how cycles work, how to pick the right cycle, how to avoid false cycles. And by doing that, I would wish you a very happy week. I mean, if you are in the US, I think we will all watch what will happen this week, but that's out of the scope for that session. So let's talk about next week, maybe with a new president in the US. Let's see there. Will it influence cycles? Maybe not. I think the cycles are already there. So that's just another news-driven event. But okay, I will shut up now. Stay safe, and I hope to see you soon next